Okay, everybody, here we go. Post-market report on this. What a day. Tuesday, October 3rd, 2023. Look, first of all, let me just say this. Thank you all, really, from the bottom of my heart for being here, for supporting my work, for everything that you do to support this blog. I mean, this is not just my thing, this is our thing. And I believe in my heart of hearts that we're making a difference. All the things you and I have been speaking about, virtually everything, is happening right now. Uh, what else can I say? Let's talk about. I mean, there's so much. I have paperwork all over my desk that I would like to discuss with you. I don't know if I'm going to get to all of it, but let's just talk about what's happening right now. We are witnessing a phenomenon occur that is obviously rattling the markets. Again, everyone's fixated on these stock markets. Andy, thank you. It's all over. Well, we'll talk more about that. Anyway, um, this phenomenon. Look, they're trying to blame this sell-off in the debt market on everything. Actually, that's not what they're doing. Of course, they're talking about bond vigilantes. Oh, it's the bond vigilantes. It's them, those bad guys, those vigilantes. You know what? Do you know what a bond vigilante is? Okay, let me just clarify this for you. Okay, this is a term that they throw out whenever there's a kind of a situation here where debt is selling off. Bond vigilantes. Okay, what are bond vigilantes? How do I put this? There are traders of bonds, people who hold a lot of it. Okay, a lot of debt. And it is their right to sell this debt if they feel like the market is in this kind of a situation where debt is selling off. Why would you want to hold debt here? Okay, if I were a so-called bond vigilante right now, holding something that's yielding nothing right now, I would want to dump it. Okay, wouldn't you? But it's the bond vigilantes' fault because they're real mean. It's their fault. No, this is not the bond vigilantes' fault. The issue here with rates selling off around the world, this is central banks who have inflated a hyper bubble in the debt market beyond anyone's freaking wildest dreams, even the bond vigilantes, because it's their fault. You can't make this stuff up. So just to sum this up real quick, a bond vigilante is a bond trader who has a lot of bonds, a lot of debt, and they're either selling it or threatening to sell it. And you're seeing the current kind of a situation, but it's not the bond vigilante's fault. Again, if you had an asset XYZ, thank you, Max. I appreciate that. You own a whole bunch of asset XYZ. Now you're watching asset XYZ lose all kinds of value. Are you going to hold on to it? Of course you're not, unless you're insane or frankly really stupid. So you're going to want to get rid of it. And that's what's going on now. And so there, again, it's the bond vigilante's fault. It's whoever else. It's not the fault of the central banks. It can never be. It can't be the fault of the uniparty. Oh no, because they have your best interest in mind. You know that because they tell you so. Do you see what they're doing here? The deceptions, the distractions, the look here, don't look over freaking there. But you, all of you here, Alan Greenspan, Dave, Lord Humongous, who's here? Everybody's here. All my friends here. Thank you for being here. You get it. All of you are so much smarter than these freaks that they're parading out on Fox Business, Bloomberg, and everything else. They got to confuse you. They think you're too stupid to know what a bond vigilante is. Okay, it's their fault and they're the ones doing this. Look, again, this market has buyers and sellers. People. There are traders of bonds, and that's what they do for a living here. Now, when you hold a bond right now that is again yielding dog poop, while yields are skyrocketing, let me just bring up another point here. Banks, okay? You know the issues here with these institutions, okay? The banks are loaded up with debt here, which is causing their assets right now to shrink in value. I'm telling you, the trouble for the banks is way, way worse than probably most of us have an idea. Not you, because we've covered this at length. There's also a whole other part to this, people. If you believe things like credit default swaps, collateralized debt obligations, the same mechanisms that help, these are derivatives, that help bring the market down to its knees and the world economy and the people with it down to its knees last time, these still exist, although to a much, much greater degree than ever before. None of this was fixed. None of this was fixed. Again, what set the stage? Tell Greg Mannarino again, because I know you know the answer because I just put a whole paper out on it. What caused the last market meltdown? And what caused that meltdown to bleed off into a global event here? First of all, let's set the stage, as we always do. This was the direct result of central banks artificially suppressing rates and pumping easy money into the market. Duh. Does that sound familiar? Yeah, because that's exactly what they have done to reinflate a massive bubble. I mean, beyond anyone's wildest dreams here in the stock market, and reinflate another super bubble in real estate. Now, this super bubble in real estate is going to lead to the same kind of thing as the population is. Let me just show you this, just so you know I'm not making this stuff up. This is a chart. I love showing you charts. Housing affordability going all the way back. You see that? I don't know if you can see these dates here. Let's look at these dates. Okay. So the financial crisis, there's home affordability was over here. During the scamdemic was over here. We've never seen this before. We're off the charts. This is home affordability here. And not just home affordability, just in case you were wondering, home foreclosures are skyrocketing. People can't make payments. Okay. As a matter of fact, part of the economic news that was reported today by the Freak Show was that people have literally completely depleted their savings accounts. Now tell me, since you all know the answer to this already, so if people are withdrawing their cash from these institutions here, they're unable to deposit money in these banks because they're going broke. They're getting completely wiped out because of the attack, the direct attack from within that I covered this morning here between the Federal Freaking Reserve and the Uniparty here in the United States. I mean, you can see what's going on here. And this whole thing with collateralized debt obligations and credit default swaps, this is going to start kicking in at one point. And just wait till that happens. And I'm going to tell you something else. I'm going to tell you something that you already know. You and I, are going to witness the failure of at least one Wall Street bank. Another bank is going down. And that is going to trigger credit default swaps. And this whole freaking thing is going to come down like it did last time. But you're going to be told right up until the last minute that is contained. It's just absolutely fine. This is not going to hurt the economy anywhere. No. You remember Ben Bernanke when he floated all that stuff out there? You remember all that? The man should be in handcuffs. Meanwhile, he gets paid, what, $1 million or $1 million per speech? Do you realize that? Yeah. Where's the uproar? Where's the uprising? He's sitting back drinking a cup of coffee, smoking a cigar. And laughing at all of us, man. You can't make this stuff up. You want another look at this? I want you to have a look at that again. I want this to burn into your brain. This is affordability right now, okay? U.S. housing affordability at a record low. Do you see this? This is right off of the National Association of Realtors. Got this off Bloomberg, actually, but that's where it's from. That's where they got it from. We're here. You think this is done? How about we're going to be down here? And if you believe, let me just tell you what this unfolds to even more. So these banks are holding all kinds of bad debt. Okay. Not only are banks' assets evaporating as, the bond vigilantes sell their bonds. Not only is that happening, but loan defaults across the board are happening. And loan defaults trigger credit default swaps. In other words, people buy and sell obviously these loans. And if one guy defaults on this loan, this other guy promises to pay. Did you know that? Did you know that every single loan has an insurance policy associated with it? Every loan you take out has an insurance. You don't know that, but it's in your payment, and you pay for the insurance on it as well. It's a sick, twisted system, but I think pretty much you all have a handle on what's going on here. At least I hope so. I'm losing my train of thought here. So again, going back to this market's under all kinds of pressure here. The sell-off in the bond market is not stopping. But remember whose fault it is. It's the bond vigilantes' fault. It's not the fact that, again, central banks colluding with the uniparty here in the United States and our so-called leaders around the world have allowed this to manifest itself. V-Dog, thank you. This epic bubble beyond anyone's wildest dreams. The debt market, people, is the greatest threat. It's the greatest threat to human life on this planet. It's a ticking time bomb. I've been telling you this for 10 freaking years. It's probably going off right freaking now. We could easily, James, thank you. Wow, buddy. We could easily see the 10-year yield above 5% very, very soon. You think the market's going to like that? Oh, but it's going to be the bond vigilantes' fault because they're very bad. Because you see, everyone should hold on to a dying asset. Oh, so the bond vigilantes who are free to buy and sell everything else that they want to, but they shouldn't do it because it's their fault. You can't make this stuff up. It's impossible to do. So again, all this is a deflection. If you hear some imbecile, okay, I'm going to tell you right now, especially on CNBC, because they're using the bond vigilantes thing all the time. If you hear that, laugh. Call the network and laugh because they're a bunch of idiots. They don't know what to do with themselves right now. Guitar Puppy, thank you. Anyway, people, look, you get it. So stocks under pressure here. 10-year yield continuing to spike. Dollar on a relative strength basis higher today. Cryptos got hit pretty much across the board. Gold and silver fell under some pressure here today. Crude oil turned around, put on a gain. That's where we stand. It's all beautiful and lovely. People, what are you going to do? What are you going to do here? Again, what have I been telling you? First of all, let me say this. If you and I are well aware, let me just get my head back on here. If you and I are well aware that the system is coming apart and it ain't no freaking accident, okay? This is by design. They want you to believe it's this person's fault or that person's fault or whatever. No. This is deliberate. They're taking it apart. This is what central banks collectively around the world. And do you think it's any coincidence why inflation is rising around the world? That central banks have been so-called in the fight of their lives, according to CNBC and Bloomberg and Fox Business. Oh, they're fighting. They're fighting inflation. It's such a joke. All they're doing is cutting off credit to small businesses, which are closing at their fastest pace we've ever seen. Okay. They're fulfilling the corporate agenda. They're cutting off the breadth of small business. Every business needs credit to flow in order to function. The only difference between the major corporate institutions is they have huge capital reserves. They got a lot of cash laying around, especially the mega cap companies, the big caps. You understand? The small businesses, no, they operate on a margin, unfortunately. And a lot of small businesses, just to make ends meet, have to borrow. But so what they're doing here, okay, this is, again, a direct collusion. Don't lose sight of what I'm telling you here, okay, between the freaking Federal Reserve, who's raising rates, and our representatives, virtually every single one of them. Do you think that there literally is not one single member of the uniparty that doesn't know every word that's coming out of my mouth? You think they don't know this stuff? Of course they do. They're not stupid. You think they became multimillionaires because they're dumb? Well, they're screwing everybody. I mean, elbow deep. But that's besides the point. Jane, thank you. Thank you a lot. But you understand what I'm talking about? People, where's the revolt? Where are the people taking to the streets? Nowhere. Because the deceptions, the lies, the distractions, the look here, the look over there. Are you kidding me, people? Really? Look, how do I say this again another way? You need to get unbanked, okay? You need to disconnect yourself from this system. I'm telling you right now. Just to put another perspective on this, what are they allowing us to know? What did we find out just a couple of weeks back? The FDIC knows that there's thousands of banks that are about to close. Okay, they're going to shut down. Thank you, Paulo. I appreciate that. But we're not allowed to know. Could you imagine they actually had the gall to say this is privileged information? We, the people who have our cash in these institutions, are not allowed to know which of them is going to fail. And I'm going to tell you right now, it's going to be a lot of banks. Okay, this is a consolidation of the system. You all know that. We've covered it before anybody else. That's a fact. But we're going to watch a major Wall Street institution fall. And that could start a cascade of events, which would be a lot worse than the last, fall of Lehman Brothers, which was, that was the sacrificial lamb. Bear Stearns assets got bought for pennies on the dollar by guess who? JP freaking Morgan. Imagine my shock. And I know you guys get it. I know you get it. But really start. What did I tell you as of late? You need to think about risk. how this will affect you. Okay. Every single one of us has a different risk tolerance. Some of us can't afford to lose anything, okay? Not even a dime. And if you're playing with any money that you can't afford to lose, then that's you need to rethink your whole strategy here. You understand? Um, but for myself, I've already told you, I've been net long this market for years and years and years and years. Okay. I have started to take out protection against on my long positions in case this market decides to go south here. I put out a whole paper on how to do this again in my free newsletter. I know every single one of you here subscribes to my free newsletter, link in the description of this video. If you don't subscribe there and read those articles, read through every single one of them, there's a lot. Look, all this information is free. These videos are free. The information I put out is free. Things like the MMRI is free, which gave us the biggest clue. Do you realize the power of that tool? Okay. Yes, it's my little creation. I'm like a Dr. Frankenstein over here, and it has worked. It has shown us the way. It has shown us the way. I'm being silly. You got to have a little fun sometimes, people. Let me ask you something real quick. We're friends, right? We can pretty much talk about anything. I hope so, right, Lava? I know we're friends. Liberty, absolutely. How is it? First of all, I'm seeing this out of the corner of my eye. We got almost 900 thumbs up here so far. I can't thank you enough for that. Those thumbs up are so valuable. 905, so valuable. It gets this stuff seen. Do you think you're going to hear a guy like me? You think they would ever allow me on CNBC, Bloomberg, Fox Business? What do you think the commentators would do if I had a face-to-face with one of them? Because I can guarantee you that I know this market, the inside, upside down, backwards, in every aspect of it, way more so than those freaks do. They're just sitting there reading the script. Oh, what am I supposed to say? Oh, I tell you, man. Don't even get me started with Kramer, man. Don't even get me started with that, man. I used to have some respect for him. I think I have zero at this point. But that's besides the point. I know some of you love the guy, and that's okay. You're entitled to love whoever you want. Anyway, like I was saying, I want to talk about something with all of you. And I want to hear from you on this. So let's see. We're supposed to have freedoms and liberties. Okay. How is it then that our so-called representative government that we have here in the United States, why is it that we can't have an honest, imagine honest and government going together? Okay. How about an audit of the Federal Reserve? Why can't we audit the Federal Reserve? Why are we, the people, not allowed to see their secondary balance sheet? They have a second balance sheet. You know that. They have the balance sheet that the public's allowed to see, and the goings on that the public's allowed to see. They show that to you. A lot of stuff hidden in plain sight. You should pay attention to this. Like GDP actually being negative. Yes, it's on their website, but they're going to tell you it's positive. They're going to float out some Federal Reserve president like, they'll float it out, or Lex Luthor, him, whatever. What's going on here? Yeah. Oh, and they're going to tell you how lovely everything is, and they're going to tell you how GDP is positive. But you go to the Fed's website, and they're going to tell you how it's actually negative. So utilize that resource. But again, the Fed has a secondary balance sheet. On the secondary balance sheet is the cash that they're funneling around the world to other central banks who are buying assets with dollars. All kinds of nefarious things are going on in there, but we can't know it. Not even the president of the United States, who's a tool anyway, can see this. So why can't we, the people here, order an audit of the Federal Reserve? Because you're not free to do nothing. You're free to listen to their propaganda. That's what you're free to do. You understand that? You're free to wear this. You're free to get this, or lose your job. Oh, yeah, you're really free. How's that working out for you? I don't think it's working out too well. And what they're doing now, people, slaves to the system, and we haven't seen anything yet. We just hit 1,200 thumbs up. Can't make this stuff up. So, look, I'm getting sidetracked here, but get yourself unbanked. Get your cash out of these. We're not allowed to know. It's privileged information. It's confidential information. Even though you have your cash in these institutions, we can't know. So why would you want to keep a single dime in these institutions that you don't need to? Get it out. Find some place to put it. Okay, because if one of these institutions goes down while they're figuring out what's happening, you have no access to your cash. You understand that, right? Yeah, go check out the FDIC's website to tell you how it works. But I'm telling you how it works. You're not getting nothing. You're waiting for some kind of check to come in and to pay your bills. Guess what? You don't have access to it because the FDIC is just taking over your bank. The FDIC was gracious enough to let us know that at least 200 banks are on their watch list for a possible takeover by the FDIC. These institutions are insolvent, and I proved it to you. Okay, I proved it to you in the last couple of videos. I've shown you JP Morgan, the super bank of super banks, they're insolvent. Okay, they have a $1.7 trillion hole that they can't fill. Okay, and they all operate the same way. The whole system is bankrupt. The whole system operates in a perpetual vacuum. That's how it works. You all know that. I think at least I've outlined this for all of you. So what do? You go to your bank. You take out everything you can, find a place to put it, leave only in there what you need to. Understand? That's it. There's no reason for us to have to participate in their system if they're not even allowed. There's no rules. They got their set of rules, and if you don't live by them, like privilege and confidentiality agreements or whatever, you're dead. Even though it's your cash, you're dead. And you think your cash is in there? When you deposit your cash and you go there with your lovely money, let's just say you sold your 1969 Camaro Z28 for some ungodly reason, and you have all this cash. Guy just paid you cash. You go to the bank and you put that cash in there that you just converted your gorgeous 1969 Camaro Z28 or your 1970 Hemi Cuda or whatever it might be. All of a sudden, it's gone. It's gone. You put it into the bank and it's gone. And it's gone. Yeah, it's really gone. I'm not lying to you. Okay. The cash is not there. It just goes off. Goes off into wherever the bank sees fit that it wants to do. Okay. They can do whatever they want with it. It's not yours anymore. You realize that? No one reads the fine print. Read the fine print of your agreement to the bank when you hand over your money for your 69 Camaro Z28. Oh, people, I tell you, man. But so and again, going back to what I said before, people's savings accounts are getting wiped out. Do you think this is good or bad for these institutions here? Again, the whole. There's at least, and then this is without including derivative exposure, at least a $17 trillion hole in the U.S. banking system. That should be pretty evident to you. Anyway, what can I tell you, people, when we think about this, all the stuff we talked about? I want to thank all of you. I can't believe this. Almost 1,400 thumbs up. Looks like someone's scared here. Be very afraid. Be afraid. If you're scared, then then there's something wrong with you, people. Some of you, I understand, here, like Scamaro, MRNC. You're lucky we've been getting a mention here. But it's you that are afraid, not me or any of my lions here, because we've taken action. We know what to do. You're going to be a poor soul outside on the street sucking your thumb with one up your gabagool. Anyway, pretty much that's it, people. Let's do a couple of Q&As here. The goal is back. Yes, here. No. Joey Socks, look, bro. I am not selling my JEPI position. I've covered this a million times. I want the dividend. It's a nice way. I don't care where the stock goes. I still get paid. If you look at the volatility in the market, JEPI pays a higher dividend during periods of higher volatility. I want that dividend. Again, look, not everyone has the look, we're all not in the same boat. And I'm going to be honest with you. Okay. And if you have the ability to have yourself spread out in a lot of different types of assets, it's the best place to be. If you had to choose just one, I would tell you it's silver. You know that. Okay. I believe honestly that people need exposure to commodities moving forward, but be prepared for how this is going to play out. Again, people need to understand how this is going to work. What am I talking about? If in fact we are seeing the opening salvos here of a multiple thousands of point drop, let's say in the Dow Jones Industrial Average, and everyone goes running to the door at the same time, you're going to see commodities, gold, silver, you're going to see a drop. Again, what do I tell you all the time? The market throws the baby out with the bathwater. It's It always happens. It's just what happens. Okay. So just understand that you're going to see this. And then all of a sudden, because again, nothing just goes from A to B in a straight line. Through this market, money flows through this market, yes, in relatively, or I would say predictable patterns, but sometimes it takes a while to get there. For example, let's talk about inflation, which I've touched on about a gazillion freaking times. When you have, let's say, the last three presidents outspend every single president before them, back to George Washington, okay, you don't get inflation right away. There is a lag effect, and that depends on how bad the economy is. In a booming economy, that cash would make its way through the economy very, very rapidly. In an economy that is essentially dying, along with small businesses here, it takes a long time for that extra cash in whatever form it's been created by central banks, mostly digital, to make its way through the system to chase the same, or in this case, a lesser amount of goods. Thank you, Red Cell. Thank you. I really appreciate that. So there's a pretty profound lag effect, and no one wants this to come down on their watch, obviously here. But that's just the way it is. That's what you hear some presidents talking about wanting a weaker dollar or negative rates. All this does is prop up the stock market, inflate a larger bubble. You remember rah rah rah? Look, I'm not beating up on Trump here. Okay, but that's what he did. He's no better off than any one of these people. This other freak here is the worst of them all, and the one before him was just as bad. They're not on your side. They understand the game and they're playing it. Okay, we're living in the side effect of what they've created. Yeah, you want to rah 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 now? No, they're all responsible for it, but we let it happen. Honestly, well, I mean, we've allowed these things to happen. I think we're at a new record here, Lava. Lord Humongous, check this out. Anyway. Look, that's a good question here. This is AMG 916 pension holders. If the pension is linked to a debt asset, which more than likely it is, okay. Yeah, you can only imagine where this is going to go. And you're absolutely right, Smart Silver Stacker. Yeah, candidate Trump was telling you the truth about low rates at that time and the issues that this presents for the market, inflating bubbles. Candidate Trump also explained how the market, before he was elected, was already in a bubble, but he helped to build it into a hyper bubble. You understand? I think honestly that, look, these people will say anything to get elected, and I don't care. They pay millions, multiple tens of millions of dollars in advertising to sell you whatever they want. Okay. And then, of course, to flip this whole thing around here. The person that promises you the least is the one you should probably vote for, although your vote doesn't matter anymore at all. This whole system has been turned inside out, upside down. It is the central banks who have become the government of the world. We've been warned for how many years? A one world government, a one world system. Go to the BIS website. They're telling you right on their front page, their dream for the monetary future, a one world system, a one world currency. You got it? Yes, pension holders could end up in a lot of trouble here. Again, most pensions, I mean, look how they're structured. They're linked to debt assets. And I mean, there's going to be someone on the other side via a credit default swap or however it works here. I don't believe pension funds are collateralized. I don't believe they're linked to any other real assets. So these things could be in a lot of trouble moving forward. A lot of trouble. Anyway, look, honestly, people, you understand this, all of you do. And I'm happy to be here to try to cut through some of this stuff for you to understand so you can better get what's happening. This is so beyond the scope, I think, of most people to understand. And it's set up like that on purpose. Do you think why do they not teach all this stuff in school? You know how many people write to me, Greg, I have an MBA from this school. I never learned this stuff. It's fascinating. I don't have an MBA. No. I studied medicine. But I always said, if you could understand the complexities of at least the human body, or you could pretty much understand anything here. Blue Horse who likes TLT. All right, people, look, I think I'm not licking any silver, Alan. No, I don't even have any silver here. This is my temporary home here. So I'm going to be moving relatively soon. Oh, people, I have a big announcement before I forget. Tomorrow, I will not be doing a morning video. I apologize that I might not even be able to do an evening video. I'm actually going to be over at my new place. I bought a new house out here, and there's work that's got to get done. I am going to try to get a video out live stream like this post market. If I can't, please don't hold that against me. I promise you, I will try to do it. But all of you, you got this down. I have no worries about any of you. All of you are in the right spots. Most of you have been with me for a very long time. Nobody knows this market or the inner workings of this thing better than you do. This is sincerely a record here, people. I want to thank all of you for being here with me. I want to thank you for the 1,670 thumbs up. Peter, thank you for that. Thank you for support, your love, your friendship. It means so much to me, all of you. You have no idea. And as always, we got each other's backs here, people. Honestly. All right, that's it. Again, I am going to try. Just get this out there because people they always write to me, Greg, where are you? And I love that people worry about me. I really do. And I worry about you too. It's the truth. Wow, 1,700. Unbelievable. But I'm going to try my best to be out here tomorrow for the live stream, 4 or 5 p.m. The morning report is not happening. So you will not see me in the morning. So you're going to have to, well, I'm not worried about you. I'm not worried about any of you. All of you are good. All right. Love you a lot from the heart. Thank you all for everything. I can't thank you enough. All right. I'll see you hopefully 1 point tomorrow after the market. I'll see you.